Okay, folks, so as we move through the early trading days of October and the fourth and final quarter of 2021, well, it's about to get violent. That means that it's time that we talk about the top 3 stocks this week. And the only thing that I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, let's go ahead and start with updates. EVs reporting very, very good numbers. You have Tesla over the weekend reporting record deliveries despite the massive chip shortage. Their extensive and strategic partnerships, like we've speculated on in the past, are really blowing everyone away. And just to put this in perspective, Kathy Wood sums this up very nicely. Tesla blew deliveries out of the park at the same time that GM has blamed their 33% year-over-year decline in US sales on chip shortages, which is crazy considering EVs require 3 to 5x more chips per car produced. Fact of the matter is that there's no shortage of old school companies that just quite frankly have not bothered to innovate, have not bothered to back up their production capacity. At the end of the day, if these old school companies don't step up and start building relationships that a lot of these new innovators, new players in the game have brought, then they're quite simply not going to last long. Anyways, that brings us over to China. Chinese EVs, NIO, XPEV, and Li all reported great numbers. NIO specifically went from delivering 5,800 vehicles in August to delivering over 10,000 vehicles in September, which is an 80% jump month over month. August delivery numbers, if you remember, were very, very disappointing, but the huge bounce back in deliveries this month really paints the picture that, hey, a lot of these analysts that said that NIO was just going to trend down indefinitely were very, very wrong. They also announced 4 million battery swaps. Li and XPEV continued huge blowouts as well. At the end of the day, what I would say based on these delivery numbers and based on sales numbers is, hey, wait a second. The Chinese EV market is very, very hot right now, and the manufacturers are starting to get a foot on the supply chain issue. And you may ask the question, hey, Charlie, wait a second, does it even matter how many cars they're able to deliver, or if they sell every single person in China an EV car? Even if they 100x their deliveries, Charlie, won't the stock just keep stagnating or go down because of Chinese fear? And the answer is, well, yes. But my take is that if you're going to buy Chinese EV companies, you have to buy ones that are in favorable tailwinds of the Chinese government and are actually reporting consistent results that ideally are audited by Western accounting firms. That way, at the end of the day, when the regulatory fear cycle subsides and you have another euphoria cycle, then you're like, okay, well, these 3 EV companies are doing very, very well. My favorite, obviously, NIO, XPEV, and Li. BYD, you can also make a great argument for. AMC update, lots of positive news, positivo. They've retired a ton of their most expensive debt. There's also a ton of huge exclusive releases of movies coming out. Venom is already out and has had a very, very successful opening weekend release. James Bond has had a huge international debut. Likely we'll hear in the US as it premieres on October 8th. So next weekend would be the opening weekend for it. And already CEO Adam Aron reported that in the UK, ticket sales hit a new one-day record, which is the new one-day record for any Bond movie ever. And similar to James Bond, I like my AMC stock shaken but not stirred. Previous announcements of booming audiences, like with Shang-Chi, brought in a huge riling up of AMC stock price. Of course, I'm already expecting media twists on why booming audiences are bad for AMC. Audiences will be fatigued with going to theaters too many times. Expect this to lead to bankruptcy. Sell now, sell now. But in all seriousness, at the end of the day, hey, analysts can call for the bankruptcy of cinemas as much as they want. And short sellers can try to ride those trends as much as they want. But at the end of the day, it's really the movie production studios that decide whether or not audiences are going to go to the cinema. If you have a good enough movie being released exclusively in the theaters, people are going to show up to the theaters. Obviously, AMC stock is more about symbolism than it is about the fundamentals. Symbolism for fighting market corruption, symbolism for the rising power and influence of retail in the market, as well as, of course, symbolism for saving what could have been a dying company. And I think that with renewed frustration over market corruption the last couple of weeks, especially last week, I don't need to bring up some of the obvious things that we talked about as of late. I think that all of these things are going to bolster the symbolism here. Okay, let's go ahead and start with Prague. Wait, no, not that one, but this one. So Prague has had a very, very aggressive uptrend last week. My timeline on thoughts is as follows. On Thursday's morning briefing, I said up as small cap receives big media attention by analysts, likely short-lived. I saw a high short interest stock with rotating retail sentiment and huge volume inflows. And quite simply, I saw that as ample catalyst and ample setup for a few day run. But it became more prominent than I expected, especially considering the risk off trading that we saw last week. week, and the first day run took it from 123-ish and then to 245 the following pre-market. Then on Friday's pre-market, I said runner from yesterday's briefing that made a big upward attempt in the after hours and now pre-market open, watching to see how it reacts to market open volume today. Quite frankly, the week trend on this is aggressive. Volume benefited it. It went from 1.8 to 2.2 before breaking down into a downward direction and cooling off on the day. But here's the thing. Prague has been skyrocketing in short interest throughout September to an insane extent. As the price has gone up, shorts have, of course, only grown more convicted. And as the price then tanked after record rallies last week, shorts have accelerated even more with short positions up 22%, which leaves current estimated short interest at 55%. If the buying pressure that we saw last week returns with these higher short interest numbers, it would go a lot farther. That being said, the time scale of short squeezers has become more and more constrained. A few weeks and months ago, you'd see short squeezers that run for maybe like 7 or 8 trading periods. Now you're seeing maybe 1, 2, or 3 trading periods with the exception of maybe CEI, but a lot of stocks these days just aren't seeing that momentum state. People want to get in, they want to take their capital and get out. They're just simply not as trusting right now, and I think it's because of the overall sentiment in the market. That being said, and acknowledging that this has already run a decent amount, there's still a ton of value in tracking these. Even if this fell back to $1 or lows at 80 cents, who cares? If it's running in the pre-market and you see a setup that could take it to like 150 or 190 again, that's gold. You can track 5 short squeezers that don't do anything for weeks, then all of a sudden one that runs massively can make all the efforts worthwhile. Okay, let's go ahead and move on to the second stock, Airbnb. So earlier this year, Airbnb got cut nearly in half from 219 to 127 thanks to rising bond yield scares. You know the story. But now Airbnb has been on an overall 5-month upward trend since its May lows at 127, and what I like about this is really fundamental based. Airbnb has tested and managed to stay strong despite some of the worst shite happening to it. A global pandemic restricting travel. If you look at their numbers as of Q2 of 2021, which are pre-summer numbers, you had nearly every reported metric either about to pass or already passing pre-COVID levels, and it's now retaken its pace from a COVID recovery company to a full-on momentum company. When Q3 numbers are reported next month, we'd expect those to be very, very hot. But it is bigger than that. You see, there's a big whirlwind of demand coming back. You see, yes, demand for travel domestically has bounced back dramatically from the pandemic, but a lot of folks don't realize that there's a ton of restrictions internationally. Whether you're from China, the UK, Germany, France, almost any European country, you are barred from visiting the US and thus barred from doing business in the US market with Airbnb. Meanwhile, Americans are still allowed to go to Europe and travel and spend money over there, but Europeans and Chinese and folks aren't allowed to come over here, which means that's a whole pool, a whole massive pool of demand that can come back into our market. And here's the good part. You see, according to NOLO, the Biden administration announced plans to lift most COVID-related travel restrictions on international travels going into the US starting in early 2021. Starting next month, all of these pent-up travelers will start going into the US and lifting all the boats, which is going to lift a lot of Airbnb's listings at the same time that Airbnb has record high listings. And as border restrictions ease around the world, Airbnb is going to benefit from that as well. But in the near term, in early November, we're not just getting an earnings report that should show good numbers. That's coming out on November 11th, but we're also going to hear updated guidance with the travel ban lifted. Combining that with the overall upward trajectory, and I'd expect Airbnb is just getting started. My third stock here is going to be more of an asset class than it is a stock. We're going to talk about cryptocurrency, baby. So as you know, crypto has been bouncing back quite strongly, with Bitcoin back in the high 40s, attempting another run to 50, as well as Ethereum and most of the other cryptocurrencies. There is certainly a ton of panic selling and fear mongering that Bitcoin would never come back because of this China ban. As we mentioned not too long ago, China has consistently hiked restrictions and tried banning it for the better part of a decade. However, Bitcoin has only managed to move up stronger despite, of course, consistent initial fear sell-offs. And so far, that initial fear has faded faster than expected. Surveys say that 8 out of 10 people see Bitcoin bouncing above 56,000 by year's end, citing a decrease in trust in traditional assets. And this comes at a time where, for the first time since March, there's been the clearest negative correlation between the price of Bitcoin and the price of the dollar. As the dollar gets cheapened, Bitcoin goes up. which in my view, if you're trying to hedge against the dollar, that's a very, very excellent thing to see. You have the Powell of Jerome stating that he doesn't want to ban cryptos. You have El Salvador using volcano power to mine energy, which could certainly bring an eruptive presence to the market. And of course, it's not blowing anybody away with the production speed, but it does represent the many, many creative ways at which we can mine Bitcoin a lot more efficiently. You also have the lead up in anticipation of the likely eventual approval of Bitcoin ETFs, making investing in crypto even easier. Though the agency has delayed for specific Bitcoin ETFs again over the weekend, SEC Chairman Gensler has shown some support for them, and some analysts are making the call that this October a futures-based Bitcoin ETF has a 75% chance of approval, which could bring a ton more capital into the crypto market. Now, I would argue that the best way to play the crypto market is to look over the next 5 years. In 5 years, are the issues that are holding down cryptocurrency right now going to still exist? Do you think there's going to be more or less capital in cryptocurrency? Do you think that there's going to be more and more availability of options to invest and use cryptocurrency? If you do, then you also think that the valuation is going to explode. I think that if you're thinking about that, you can look past all of the regulatory FUD. You can look past a lot of the energy BS FUD that's also getting more and more efficient over the years. If you hold a long-term perspective on the crypto space, you could say, hey, wait a second. I'm just going to average in during dips and FUD. I'm going to ride the waves as they come and go and exploit the downside of the waves and maybe take some profits on the upside of the waves. But overall, this is a long-term race. This is going to go up and down a million times, but if I know the long-term trajectory is a certain direction, well, I'm going to try to hold my favorite highest conviction assets in the sector. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade with our step-by-step lessons, our private chat, and of course, our daily morning briefings, where we brief on what's happening in the market each morning and all of our favorite catalysts, well, I'll go ahead and put a link to that below. FUDSTOPPER50 coupon code will get you $50 off before checkout. And lastly, if you're wondering what broker to trade these stocks on, well, if you're a buy and hold trader, multiple days to multiple months or years, well, I recommend public.com/ZipTrader. Sign up with our link below and you will get a free stock. If you are a day trader or swing trader, I also recommend Webull. And with Webull, you will get 2 free stocks if you sign up and deposit just $5 or more using our link below. Anyways, folks, that caps off the video and I'll see you in the next one.